Good day. I'm Epstein, and here we are with your weekend edition, and it's actually Monday, the 1st of January, 2024, but it's New Year's Day, so I'll call it the extended weekend edition of your metal market update. And as I said, we're going to use the weekly charts, and that's why it's the weekend edition. I want to thank one and all for watching these. I want to wish everybody a healthy, prosperous 2024. I will do my darn best to give you special reports, market analysis, what they are, but I don't do what so many analysts try to do, and that's in the month of January tell you what the year is going to be. I don't have the slightest idea. And by the way, nor do the so-called pros that are making those predictions. Some will get it right, some will get it wrong, the majority won't be right. That's been my experience in doing this for 50 some odd years. And that is because the world evolves. Have you ever wondered why artificial intelligence, nobody's got an ETF that's come out and said, we are just blowing the socks off the market, this is it? It's because the game is random in many ways. It changes like this. It hasn't been a market that is so-called predictable. What is predictable? What is the length of time? How do you hit and run in the market? Well, from my perspective, you take the market a day at a time and you use the weekly charts as a filter on the daily. Example, one of the things that I hate is if I have the weekly charts in a bearish formation and I have a buy signal on the dailies, I'm always very careful. Is it no more than a bounce in the dailies off the bigger picture? Or is it going to turn the weeklies where they're going to turn up and the whole market's getting bullish? It's always a cat and mouse game in trying to figure that out. Just remember that. Is it a year where we're going to see a recession? Is it a year where interest rates are going back in the 10-year to 5%? Is it a year where mortgage rates are going to go, instead of at 7%, down and crack the 5% number? You know as much as your neighbor. You know as much as me. I cannot predict the future. I can ride trends as good as I think anybody out there. I can look at a chart and analyze probably better than 90% of the people out there. So that's what I do, and that's what I give you here. This particular video is not about buy here, sell there. It's to tell you what I think the pros are doing in the market, where the market's looking. Where I think what you do, and you take it, is in my morning subscriber videos, and that is because that is where I say buy here, sell there, here's your stop, here's your objective, let's cut down half our position, let's do it, oh, we were stopped out, we were just totally wrong, blah, blah. You will see all that type of talk from me there. So when people write me, well, Ira, I'm looking for your analysis here in the freebie. You're not getting it in the freebie. Not going to do it. You go to your doctor, you think you don't get a bill? Go to your lawyer, you think you don't get a bill? If you want to see what I'm actually telling the paying clients, become a paying client. Really simple. All right. So in this market, if you take a look on a monthly basis, you're up 1.65%, and we do have the highest close, period, in the history of gold on a monthly basis. Take a look at the chart. This chart, I'm just going back to 2008. No prices before that were even lower. So gold finished off on a nice note. On the weekly, you're back up to where you were. Remember, we got up as high back here into this area. So we've come back. But you can't argue that the market's not staying over the 18-week moving average, and that's bullish. When you take a look at the chart, you know that we got up into here, into the 2150s, came crashing on down, and then came back up, and we're now having that correction. I told you we'd probably get a 50% bounce off the high to the low of that on the dailies, and you most certainly have. The pattern of the chart is bullish. Higher lows, higher highs on a weekly basis. The support in the market is all the way back here, and that number is going to lift. If you just take a look right now at what we have, you finished 1969.40. The week before was 1960, about $9 lower, and the week before that, 1950.90. So if you just say the market's seeing the moving average move up about $9 a week, when we come in, we should be closer to the 1978 level. and that's going to be above this last break low of 1975, which tells me the 18-week average is probably a very, very valid support zone. That doesn't mean it has to go back there. That's still $100 nearly from where the market is here. Where's the resistance then in the market? Take a look at your Bollinger Band. You want to buy over it? I love it. I need my clients to have somebody to trade against. So that would be great. Because when you get over these bands, they have been bad for your financial health, as when they get under them, trying to sell under them. That's not to say the trend has to end. That is to say that's where a correction often sets in. Why? Because 95% of the time, the algorithm is designed, by design, to keep the market trading within the bands. So when you get there, it's a natural support or resistance point. If you haven't taken my enhanced Bollinger Band course, now, not 2 weeks from now is the time to take it. To learn this, how do you apply it? How do you add positions as you get a Bollinger Band that comes up to it and at times gets the embedded readings? I'm telling you folks, one of the most powerful tools I know of. That doesn't mean I know everything. It's one of the most I know of, and if I had to trade one thing in my lifetime, that is it. Higher lows, higher highs, overbought. Nah, I'll let you want to own that. On a weekly basis of the gold-silver ratio, the fact that you got back over the 18-week moving average means silver got weaker than gold. And you see that here. The silver market backed away also from the 18-week, but look at how sideways this market is. Sideways markets are great. When they leave the sideways action, you get generally speaking, it doesn't have to be all the time, sometimes you leave and you just set another slightly higher and lower level, but most times, the narrower the band, the bigger the ultimate move. I would not call this a really narrow band. I mean, if you look at the upper Bollinger Band level, and that comes in at 25.17, and you look at the lower band at 21.68, roughly, in round figures here, what, a $3.50 range. I like when ranges get about $2 in silver. Then they're really tight, but it's still okay. We'll see if it can tighten in more. In the copper market, Dr. Copper tells you about world economies. Copper is used in so much in industry. It's probably the most used metal there is for industrial applications, electricity, conduits, I can go on and on. It's a magic metal. The beauty of it is there's a lot of it around the world. Unfortunately, labor strikes and so on have caused problems in the big producing areas of South America, Latin America, all those areas. And you've gotten something of a shortage. Second thing, the world is wondering what is China going to do to spur on its economy. Now, over the weekend, there were stories that China's going back to the grids. In other words, urban, in the cities, they're going to fix their infrastructures. Well, in order to do that, you're using copper. And it's come alive as the market listened in December to the Politburo and then to the economic councils. We get in March, and it's only 8 weeks away. In March, you start getting how they're going to do what they're doing. Along the way, we'll hear the People's Bank of China, PBOC, is going to tell their regions what they should be doing and how they should be lending money and what to do. There's no choice in doing that. It is not a democracy. It is a communist country. They'll do what they want when they want. Remember, Alibaba got too powerful? You saw Jack Ma went into hiding, at least he didn't go to jail. And we didn't hear from him for 6 months to a year. Now they've just gone after the gaming companies. So industries that do too well, that's it. They have the largest now motor company, BYD. It has surpassed Tesla in electric vehicles. I'm going to cover that tonight as we do the Spider ETF video. I think it's time to cover that as well. But you're in a resistance zone. You're up to the 100-week average and the upper Bollinger Band. This is where the resistance should come in. And the big supports between the 200-week average down to the 18-week. When you look at the platinum, It had a strong seasonal. I said to you in my morning subscriber videos, not the ones here, my subscriber ones. Folks, if you put a gun to your head, the metal you want to buy is platinum. It's got the seasonal that goes up 100% of the time over a 15-year period. That doesn't mean the 16th year is going to go up. Okay, it's what it did. If history predicted the future, you'd be a billionaire. It doesn't. You know that, I know that. But it is certainly something to watch. Why? Because there's events that happen in markets, such as when you plant a grain. Is the rain going to come or not? The market will react certain ways. Well, there could be things in platinum. You do a certain amount of hedging, you do unhedging, you do certain things in the industry that kicks it up at that time of the year. There's always a reason why a seasonal comes into play. Now, you're up to where the market had to go, or did it? Not really, but it went there. It went to the upper Bollinger Band and managed to, in the past 2 weeks, get over both the 100-week and the 200-week. You don't just generally get over them and run away. That doesn't mean it can't happen, but I'll look for a pullback here. And in the dollar, look at how it fell. 2 weeks ago, Thursday, I did my last special report of 2023, predicting a big break in the dollar. It's been happening. I'm happy. My special reports this year, especially the stock index and the dollar on the money. So, how do you get our research and what do you do with it? Well, I'm part of the Linn Group, and I think we have the best commodity market research in the industry. Bar none. I want to make that very clear. We put out all day long reports on futures, options, spread strategies, and the cash markets. We have clientele that cover all that. They ask questions, we write about it, we put these reports out. So if you're going to be a futures trader, I don't care the area here, you want to see what we write. Our price counts are as good as you get, all right? I've not seen anything like it at any other firm, and I get research from God knows how many come across my desk, and some of my research I trade off. I give to certain people, so they get that. How do you get this? Because there's no charge for it, all right? Move, and you're just going to get a sample unless you're one of my subscribers, you have an account with us for trading. You move your cursor up here, there'll be an icon, give it a click. You can go to our website at iraepstein.com. Free offers, take what you want out of there, give it each one a click, we'll get it to you this week, and away you go. Give it a try. Again, it's free. We're not asking you for a credit card. We're not asking you for anything. Take a look. And by the way, you don't have to get it all. When you sign up for this, you can choose which different ones you want. So you may only want stock indices. You may only want currencies. You may want something else. Whatever it is, we will make it and give it to you so that you're just getting what you want to see. I'm Ira. I appreciate you looking for us. Happy New Year. Good trading to you. And I'll catch you first thing in the morning on Tuesday. Take care.